Hey, it's Mac with PriceActionTradingSystem.com, and it's Monday, it's December 9th. This will be our chart lesson for today. And um, we actually had for compared to what we've been getting, it was a pretty substantial sell off today. It was mostly all downhill today. So, first real consistent selling we've had in I'm not sure how many trading days 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. First real substantial trading sell off in the last 16 trading days. You can see we closed a little lower there, a little lower here. Otherwise, it was all up mostly every day. So we were overdue for. I mean, we're getting close to the top of the upper trend channel as well. I drew another possible channel here, and we've had a close outside now and a new high. Will we finally sell off here? I just, or get a bigger correction? Possible. But we relieved a lot of the overbought situation, so we got room to go higher still. So we'll see what tomorrow brings. Just looking at this chart, I would say we'll probably see some more selling at least early on tomorrow. But at this rate, with the way this market's been, nothing would surprise me. We could turn and go straight up for that matter. So wouldn't surprise me. So we'll see what tomorrow brings when tomorrow gets here. There was no news items today, so nothing to really spark the market or spook at either one. So this was just based on, I think we were just time for a correction, honestly. So let's flip over to the 2000 tick chart, take a look at it, go through the trades, and we will wrap this day up. Okay, here's a look at our chart. What we had was a two-tiered channel working lower. It was pretty much lower all the way into 10 o'clock. I believe we had a small overshoot. As you can see here, we usually use the closes as your low point, or your, not closes, your body, so your lowest point of your body. And you see we got a close outside that here, so looks like maybe an overshoot, which might lead to a reversal. Really, all it led to was two legs of correction, and then we ran down and had another channel down, and we just chopped sideways really into the close. So the question is, do we have an overshoot here? Yes, maybe, maybe not. But to me, it looks like one. If you zoom in here, you can see I was using these closes here, and we did overshoot that and close outside that. So to me, that looks like an overshoot, which could lead to a reversal here. Which, and the reason I bring this up, I'll talk about another trade over here somebody asked me about, and we'll talk about that shortly. But let's move back up here and go through the trades here. Start at the top. Around 7 o'clock is usually when we start trading. It's usually safe to start trading about 7 o'clock a.m. Central Standard Time. So depending on what you have to convert that um, to your time zone, but generally you can start trading safely around 7 a.m. and sometimes a little earlier than that. But 7 o'clock is probably plenty early. That's when I used to like to get to the office. Do I come in at 7 o'clock every day now? Last year or so, not so much. I try to get here at 7, but sometimes I'm here and sometimes I'm not. I'll just be honest with you. I've had a lot going on in my personal life with my mom having a stroke and then falling and breaking her leg, and now she's back in the hospital again. So I've been tied up with that all weekend. So I do appreciate the notes and messages on her and the prayers. I greatly appreciate that because she certainly needs them. It's her health decline in the last couple of years has been a tough situation for all of us, including her. So she's really down and depressed because she's kind of lost her. She can't drive anymore. She can't really walk anymore. So she's kind of lost her freedom, and it's affected her mentally, and of course that's affected all of us mentally. So anyway, I've been dealing with that, but for that reason, I don't always get in at 7 o'clock anymore because I'm dealing with her a lot. Uh, and honestly, uh, you know, I want to be careful how I say this, but I don't necessarily need to be here at 7 o'clock trading anymore. I don't need the money anymore. I'll just be honest with you. So, I mean, sure, I like to make money and I like to trade. The big thing is I still love to trade and I love everything about the markets. I love the challenge of it, and I'll probably always be tied to that for some reason. I'll probably always trade for some reason, but I'm getting close to retirement, and I don't have to trade every day and trade all day every day. And you know, if I'm here, I'm trading until I hit my goal, or if I'm distracted, I don't trade. Simple as that. But anyway, let's get back to the chart lesson. So we've got this two-tier channel working down. I believe we had an overshoot, but early on, all we had was this. And you can see we trended up, we trended down, and then we were trending back up. We get a close outside and a second entry long with a nice signal bar. It's about 10 ticks. So for today, with the low volatility, it's a rather, it's a slightly bigger bar, but it's nothing crazy. So I like going long there on that second entry. I don't worry too much about the size of the bars. If the chart says it's a great place to go long and you get a good setup, which that's hard to beat, a second entry with a great signal bar, closes above the EMA. You expect a retest of the highs here, and off it goes. Now, it doesn't quite make it. We get up here and then we get a triple test of that level. So I like going short there. You can't enter this on the engulfing bar. You have to wait till this closes. I say this over and over and over. If you're not an experienced trader making money consistently every day, do not trade engulfing bars. Now, if they close and everything fits, yes, trade them. But don't trade the engulfing bar. I say that, I don't know how many times I say that. I say it consistently over and over and over, and it never fails. Somebody will send me a chart and say, why'd this fail? And it'll be an engulfing bar. Engulfing bars are not, they're tricky. They're not consistent. They will throw you off. They will start off looking very bearish like this and turn and close and go out the other side and you're stuck. So just unless you're an experienced trader that, and when I say experience, you're making money every day. You're not losing money ever. That's the kind of people that trade engulfing bars. And even then, they'll get fooled sometimes. So they'll have a loser, but they're smart enough to know that, hey, we're going to get tricked on those sometimes. But they don't get fooled as much as the average guy because they got a lot more experience and a lot more chart time and screen time. And, people will lose sight that this is a skill. And there's nothing, this is not something you can come in here. You can learn the strategy in 6 months or a year if you're really good, but it doesn't mean you have the experience to come in here and understand everything going on this chart. I'll see things that people with 4 or 5 years probably won't see in a lot of cases. And I'll see stuff that most of you won't ever see. So I try to be, when I do this chart lesson, I try to see it with somebody with less experience. Occasionally I'll mark some of these because of my experience, because there are some people that are getting further ahead and that do want to learn that kind of stuff, but it's probably only a handful out of everybody that watches these videos. Probably not even a handful. I'd probably list 2 or 3 people on one hand that should be trying to trade engulfing bars. The rest of you, leave them alone. And I don't know how I can say that any differently or how many times I can say that, but if you trade them, just understand this. If you trade them, you're going to have a loser. So don't send it to me and ask me why if it's in a engulfing bar. You just got fooled. Nothing other than that. You misread it and you got fooled. So I don't know any easier or simpler way to put it. Stay away from them until you're super experienced. And then even then, be very picky with them. So anyway, you can't trade this on the engulfing bar. It's a second entry short. You got a triple test. I marked it green, but honestly, there's plenty of room back. This looks like it's setting up for a range. You got 3 tests down here. Now you got 3 up here. I like going short there. I mean, you could argue for that to be blue. I made it green because it's right at the open, and that, people get confused with that too. I know a lot of people say, don't trade the open. The price action is the price action. It's never wrong. And you see you got a triple test there right at the open, and what does it do? It goes lower. So honestly, the open doesn't matter, but so many people get confused at the open. I marked it green. There's so many people scared of the open, but it's just like you read all this stuff about stay away from the opening at 8:30 and stay away from this, and don't take any, you got to have a perfect, you got to have this perfect, superb loss, uh, what are the words I'm looking for? Your stop loss ratio. Your stop to your target has to be some special ratio, and that's just, for what we do. If you're scalping, that's all bogus. Don't worry about that stuff. And I say that over and over, and people just don't get it. But you've had this stuff banged in your heads for so long that it's considered the gospel by most everywhere you read out there. But they're all losing traders, so don't listen to them. Listen to what works. The most important thing about entering this trade right here is putting your stop one tick below that. Nothing else matters. That's the most important thing. How big this bar is, even if it was 6 ticks bigger, it's still you easily got your stop or your scalp, and then it didn't matter after that. That's the whole idea behind the scalp and run is you scalp out and you're safe after that. Now, if you're just starting, you're only trading singles, or you can only afford to trade 1 or 2 contracts, just be a scalper. Don't even worry about runners because your ratios are not very good, and the math doesn't work very well. In other words, so you need to be able to get to where you can trade 20% of your contracts as runners and let the others be scalp. And so to truly get to 20% runners, you need to trade at least 5 contracts. And that means you scalp out with 4 and you have 1 as a runner, and that's your 20%. And so if you can do that, then if you get a loser one time and then you get a winner, it doesn't necessarily wipe you out like it does if every time you're only getting one scalp and you lose 2 on your runner every time. The math does not work. It doesn't work well. So if you can't trade more than 3 or 4 contracts, I would say the perfect ratio is 5 with one runner. If you can't do that, then just scalp out in full until you get to where you got enough money to trade, and you're good enough to trade 5. It's going to take you a while to work from 1 contract to 5. You could be a winner at 1 or 2 or 3, and you go to 4 or 5 and you're a loser every time because of the mental aspect of it. Because the more leverage you get, the more every tick counts against you, and you're going to get to some point where you can't go any higher, and there may not be any need to go any higher. And just an example, people ask me all the time, why don't you just trade 100 contracts and take 1 scalp a day? Because the reason I don't do that is because when I got 100 contracts, 1 tick against you is, well, 100 times $12.50. What is that? $1,250 every tick that goes against you. So if a trade starts working down here near this stop and it's 10 ticks against you, you're down big time. And that messes with you mentally. And so I can't handle that. It throws my mind and I screw up, start making mistakes, and I'm like a inexperienced trader. It jumbles my mind. I can't do it, so I don't try to do it. But it doesn't mean I can't trade 20 or 25 successfully every day, and that makes me plenty of money. So why do I want to try to do something that makes it hard to make money when I can do something that makes it easy and I'm successful? So people don't understand all that, because as you get more experience and you start to learn to do this and you get good at it, all this will make sense to you. Right now it probably is just like Spanish if you're an English speaker, or English if you're a Spanish speaker and you're not fluent in the other language. So that's trading for you. But anyway, I don't mean to get off on all these tangents, but I think they're all important. And I say these things and people do not hear it, or they do not listen, or they do not care. I don't know which it is, but if I say it, please don't come whining to me. And I'm not saying everybody comes whining to me, but this engulfing bar, last week or a couple of weeks, I bet I gotten 3 or 4 emails about engulfing bars. Why was this a loser? It looks perfect. Well, you traded on an engulfing bar and it fooled you. And they're very unreliable and they will fool you. This one closed very low. It opened high, it broke higher, failed, turned down, and went out the other side. And what happens, a lot of people will go short right there, and then this thing reverses and climbs back up. But this time it closed lower because prices are going lower. But it's hard to know that ahead of time. It could have gone higher because we were expecting a retest of this high. So it could have gone higher just as easy as it went lower. We're just going sideways, so you don't know which way is going to win out really yet. But yeah, this could easily be red. Oops, didn't mean to do that. And that's a nice move down. And if you catch that, that might be the only move you need today to reach your target. Comes back, uh, gives you a first entry right here. You made a new low, so that's a first entry short. So you really don't want to take that one. You do get a close outside a new high all in one, but you're not back to the highs, so it could easily go up. You need to at least wait on a second entry there. Runs down, finds a bottom, makes a double bottom here, and you get a first. There's a second entry right there, but that bar might qualify. But on a breakout here, I think you need another test. You really could count this as two tests, and that's not enough. It does help that this is a second entry, but you don't have really your supports across there, and you don't have much room. This looks. Let me just draw it for you because it's some people will miss this if I don't. But hopefully you can see why it's dangerous to go short there, and it quickly fails and goes higher. And I didn't mark this one. It's a little congested, but you could argue for that to be green because that is a second entry long when you're expecting a possible failure here. And what does it do? It works two legs right back up, makes a 1, 2, 3 triple test. So you got a triple test and the second entry short and a perfect signal bar. Again, I marked it green, but I think you could argue for this to be red because it looks like there's a possible trend channel working up here. And it does get a break and a couple legs back to a new high before it goes lower. So it probably is one, but at the same time, I really like that trade, and I think it's close to, you could argue for it to be red, but because of that channel, I think you have to make that green. And you might say, well, why didn't I draw it from the very low? And you could have. But even if you draw it that way, it just doesn't seem to fit well that way to me. But it could, that could be right. Here you get a close outside the new high all in one bar, and at this point it's still almost red, maybe green, and you see it doesn't go far before it runs up and makes a new high. So I really think this was correct. It tends to fit really well there. Just right off those bodies, and the upper side's fitting well, and it doesn't make it because it hits that support. So I think that's correct right there. And you'll see some like that. Some, not all of them are like that. And if you drew it the other way, I wouldn't say you were wrong. But it does get the break, two legs back up, makes a 1, 2, 3 triple test, gives you a very bearish spark. Go short right there. That's where you go short. Now you got multiple tests across here, and you got plenty of room to get out. So this sets off the downtrend. So this turns out to be a really nice trade. I don't know if you catch a runner there. You probably don't. Just depends on how you played it. If you're conservative, you probably don't get a runner there. But if you just hold on, a little bit later you get a second entry short here, and you probably get a runner on this one. You could at least write it down to the low, and you might even stay with it the whole way. Me, I probably would have exited down here if I got a runner off of that trade right there. Just the first entry here, comes back. I marked this as a possibility. It's the first break of this cyan channel, and there is a hidden second entry there, and it's a pretty nice signal bar. The other thing I like about it, again, you don't have a close outside on this green channel, so that's a possible issue. But you got a 2-bar matching high up here, and you've got some more resistance across here as well. So maybe you take that trade. I marked it green. It turns out to be a really nice move, and it's only 6 ticks, so it's low risk. You can get in with an 8-tick rule, and it runs straight down. There was actually a second entry short right here, but you don't want to go short right into the lows of the move. And then we just start working sideways. And I don't really see anything. I don't think you want to go long yet because of the bigger channel. And I don't see anything to the short side. This one's close, but I think you're better off just to sit and watch that. It's the first entry there. And then finally we bottom out down here and we get this overshoot. To me, that looks like an overshoot because I've been playing it right off these closes here, or these bodies. I'm sorry. I always want to call that a close, but it could also be, as you can tell, it could also be an open. So it's off the bodies. So if I say close, it's just my mind's, I'm thinking bodies, but I'm saying close, and I do that quite often. I've said that a lot. I've caught myself saying closes but it's not closes, it's bodies, the body of the bar. And that's the only time you do that. Usually you start at the low or the high of the stem, and you include the stem. And the stems are important, and when you're placing your buy order or sell order or your safety stop, you include the stem. It always goes above or below the stem. So I get that question a lot as well. But this looks like a possible reversal. We just go right on through that trend line. We get a close outside, but we don't quite get a new high. I don't see anything reason to go short. That's too congested. It drops down here. Now we got a double top, and then we make a double bottom. So it looks like we could be going to a range here. And it's tempting to go long right there, but I think that bar with a 2-bar matching high is just, I think you need to sit tight, and you see it does turn down. It ends up going higher. But somebody sent me their chart, and they went short right here, and they said, hey, we got a break, 2 legs up. And they were expecting prices to go lower. Well, that's the rules. His thinking was perfectly fine if you don't account for this overshoot. If you're saying this is not an overshoot, then his thinking's probably off because we could go higher here. So the way I treated it was I treated it like it's possible we got a range going here, and also so you'd need a lower high here. You could possibly go short there, but you might get a loser, which you would have. And this would have been the better spot, but you don't get a setup on that one. And so you don't really get a chance to enter. There is a triple test here, but you got to go long into the midline into a 2-bar matching high, and there's no close outside of this candle yet. And you see it does get a close outside, runs to a new low, and you get a failed breakout. Now maybe you go long there. Now this is an engulfing bar, and that bar is totally red. When this breaks lower, this is one you might trade on the engulfing bar if you like the context of the chart and going long, which if it breaks above there's a good chance it's at least going back to the EMA, and it's probably going back to the other side. And you see that that's exactly what happened. It went to the EMA first, so you would have already scapped out. Now if you wait till here, you got to ride out a little bit of a pullback, I think. Yep, so you don't quite get out there, and you got to ride this pullback back. So you're always better off to wait on the higher low, which comes here, and you don't get a setup you can take. That signal bar doesn't qualify. And this is where your trend up starts, close outside, move to a new high, and you get technically by the counts, this is a first, second, third, fourth entry. So we're not really taking it because it's a second entry. We're taking it because we got to close outside and move to a new high, and we found resistance up here on the original support resistance and lower than the last high, way away from the EMA. So I like going short there because this one you got a little different setup than you got over here. You know you got a range now. And this one takes off. Boom. And we make another breakout. And I wouldn't even attempt this one because you're still in this down channel, and that is really strong. So there's a good chance you're going to get a retest of the low here. It doesn't happen. You actually get a trap here. And so, in this one, you cannot enter. Of course, this isn't really an engulfing bar. It doesn't break higher, so never mind. But notice you get a first entry, second entry that fails. This is a trap, a second entry trap for people that don't understand that breakouts normally fail. And we're going to take advantage of all those people that went short here. And when it breaks above that, it's going to reverse. And we're going to, all their safety stops are going to get hit, and they're going to jump out. And we're going to take advantage of it. And you can see, you catch that, and that's probably the trade of the day right there. It runs all the way back up with very little heat. You took a little bar of heat here and a little bar of heat here, but you never even got one that closed outside the trend line until way up here. So that's what you want to catch, and you want to catch a runner. And you would have, if you get in this, it did gap over, but it came back. So if you got your order ready quick, you can drop it in there, and you should be able to get in there and go. But you got to be quick at it. You got to be good at that. And if you notice, if you do get in there, if you just wait till that bar right there, you get, what is that? 9 points. And I probably would have waited till I got a close outside one. And I probably would have been out at 8.25 points. So that's the kind of move you want to get. And you can't really go short here because you're still in this channel. And I'd wait on a lower high here, especially not because we're still in this channel. Just like over here, you're still in this channel. There's a good chance you're going to get a break at a new high. You don't get it, but guess what? If you went short there, it goes higher. If you go short here, it could go higher. It doesn't, and it just runs down. This is actually a spiking channel, and I treated this like a new trend. This is a spiking channel down. Maybe it is a retest of this. Maybe I'm wrong, but it works the same. It's still another trend down. It's much more than a break and 2 legs down, and this lasted. This was like a correction here, or a sideways correction. It tried to go higher, and then we started a new trend down after 2 legs of correction. Notice 1 leg, and then the second leg. You didn't quite get a full 2 legs, but we were close. We missed it by a few ticks, maybe 4 or 5 ticks there. And then as the bottom just drops out, and you go into this spiking channel. There was just a first entry here. There was a first entry here, another first entry here. Now there was a second entry here, but you can't enter right there. That signal bar is an inside bar. It would have been a good trade, but you see how quickly it reverses. Again, just a first entry. It's a shame you got a big move down and you just don't get any setups for it. It's unfortunate. Here you just have a first entry. However, you got a new high there and you get a first entry, second entry. So this is a failed second entry continuation pattern at the trend line. And because you have such a good signal bar with plenty of room to low, I like that one. And you actually get 2 legs down, a break, 2 legs down, and then we just kind of chopped sideways. We rallied, then came back down, then rallied. Just kind of moved sideways. Really from here on, you have turns into somewhat of a range here. And you can see that now. Sometimes it helps to draw this stuff. Of course, it didn't matter because it wasn't really a range. You just had some resistance up here prior to it getting into 230. And other than that, you're still in a downtrend right here. And notice you get the close outside, new low, and then we just work sideways. So there it is. Almost 30 minutes in this lesson, but I got sidetracked several times. But I think that's this important stuff, the engulfing bars, understanding your experience level and trading to your experience level and not trying to beat, people say nothing that I know the worst thing I hate to see somebody do is send me an email and saying, I'm looking for one more trade to put in my quiver. You don't need another trade in your quiver. When people are doing that, they're going to lose. I know they're not ready. They don't understand what they're doing, and they're going to lose money. So if you're thinking you need another trade in your quiver, hang it up because you're not even close. And I know people don't want to hear that, but I'm just telling you, the best trade you can do is second entries with the trend at the key entry points. All these trades happen at the key entry points. The other one is finding ranges and getting triple test without it making a new high. So if just those two entries, and you can make all the money you can ever stand, and you'll be somewhat conservative. Now there are some other trades. I mean, everybody knows the trades we teach here. The failed breakouts. If you're going down, you're trading with a trend, and you're looking for entries that come back to the key entry point, which is the trend line, and you're looking for good setups at the trend line. If you get it, go short. And if we're going sideways, we're playing range rules. You're either playing failed breakouts or you're playing consistent bounces at the support and consistent turns down off the resistance. It's that simple. But people try to make it more complicated, and I get it. And most people are tainted before they get here, and they've learned all the wrong things and all the junk that's out there and all the hogwash. It doesn't amount to mean anything. They're saying use this stochastics, use this RSI, use use that. Everything you need is in this chart, including the volume, um, the volatility. It's all in here. You just have to train your eyes to see it, and then you don't need all that other junk. It's just confusing. Having to take your eye off the chart and look down here when it means nothing. You can be oversold or overbought longer than you can shake a stick at it. So that stuff is meaningless. It might tell you, yeah, it's getting time for a reversal, but it doesn't. But that's it. It could go on for, prices could go another 20 points lower before you get that reversal. So you don't need all that stuff. It's just confusing and just distracting. It's all in this chart. All you got to do is learn to see it. So anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.